and I started just eyeballing them. I just started clicking through all these. And in terms of having your platform set up, what you should do is have a watch list set up, and then have some charts sitting there. I happen to look at, like, I happen to use what is referred to as the triple screen. And if you're familiar with that concept, if you Google Dr. Alexander Elder, he's kind of one of the gurus of multiple time frame analysis, and he talks about the triple screen. And basically, the triple screen involves basically having 3 time frames and having a higher time frame, an intermediate, and a lower time frame. Okay? And you can kind of read about that, and it's quite useful. We can talk about that at some other time. But anyway, so this is what I started to do yesterday, except rather than looking at these things in these higher time frames, I started to look at them in lower time frames, okay? And so rather than having this, having these time frames here, what I had was, let's just get here, time frames. They basically now have the same exact setup that I just showed you there, but rather than looking at a weekly, a daily, and an hourly, rather than that, I had basically a 1 hour, a 15-minute, and a 5-minute. And so this is what I was using yesterday in order to kind of scan for opportunities, okay? So now we go back here. I scanned through about those 25 stocks, okay? And this is just sort of what I came up with. So this is EOG, I don't know what it is, okay? But what I did was I ultimately identified 5 stocks that seem to offer good demand zones. These aren't always necessarily like the prime ones that I would necessarily use for like a long-term options trade or a major swing trade, but for something that's kind of a quick hit and sort of an intraday trade that you might be in 15 minutes, 30 minutes, 45 minutes, it doesn't necessarily have to be something of the same quality that you would be looking at for let's say, something you're going to be in for a week or several days or whatever. So anyway, this was one setup that I was looking at. Okay, price came up, rallied here, consolidated, and then we had these 2 very bullish candles that came up, kind of pops up there, and now I'm waiting for the pullback there, okay? And all of this was happening, you can see, around 12:45, okay? Here's another one, FANG, okay, Diamondback Energy, price came up, notice the consolidation, notice that very bullish candle that rockets out of there, okay, pops out of there, again, waiting for a pullback here, and this would basically be our entry, okay? So entry here, stop out point there, okay? Another one, MPC, what's that, Marathon, I think, Petroleum, that's 1 p.m. Here's another level, okay, price rallies, consolidates, very, bullish candle here, and then that march of green ones up here. So again, all of these things reflect an area of upward price pressure where there wasn't a whole lot of this didn't spend a tremendous amount of time in here. If this thing spent like an entire day or two in here in the context of this time frame, well, then that wouldn't necessarily be the greatest thing. But the fact that this was only in here kind of basically in here for about an hour, it means that basically not everybody that necessarily wanted to buy and sell in here got the chance, because then all of a sudden that price exit here and the fact that it came out of here very bullishly basically reflects the fact that there was a sudden exhaustion of sellers here. So the sellers disappeared down here, and all that was left were the sellers disappeared, and all that were left were buyers. And for these trades to occur, all the buyers basically had to run up the price chart until they found willing sellers, and then that's how that run occurred. Okay, so that's another setup. Here's another one, PSX, and I actually identified 2 levels that I liked in sort of 2 different price lenses, the 5-minute and the 15-minute. Okay, so here was a level that was sitting up at around just above $67. Okay, and then here's a one that was lower on the 15-minute level. And so depending on what was going to happen, I was either going to basically perhaps take a trade here or perhaps be more patient and wait for it to come down here. Because in a sense, this actually, both of these are actually quality levels in their own way, contextually. These are actually both nice levels here. So this was the other thing that I was looking at. And then the last one I was looking at was the XLE itself. Okay, so this is the ETF itself. So again, price came up, popped out of there, was heading there, and again, waiting for that pullback. As an aside, as an odds enhancer, when we actually get into the trades on the other stocks, in a perfect world, we would actually see this thing pulling back to its zone. Because at that point, then you would have the sector actually showing up with price pressure along with some of its constituent stocks. And that would obviously make for a great odds enhancer to have, in a sense, the bigger picture pulling along the littler picture, which are the individual stocks. Okay, so these are the setups that I was looking at yesterday. Okay, so what happened? All right, so here's EOG. And so here's the thing, first one we looked at before. So here's what we looked at earlier. So there's the setup, and price came back, pulled back there, and basically we ended up there at around 2-to-1. So right there in the space of about 30 minutes, pull back to there. So in the space of anywhere from 30 to 45 minutes, we basically ended up with a 2-to-1 move there. Okay, so there's one setup there. Okay, and then this is what I was actually looking at also to help with my targeting also. Once you're in a trade, you can also bring up and go to sort of a higher time frame to sort of look at to see what might get in the way of your trade. So this is what I was looking at as I was in this trade here. Okay, in context, we were basically getting to here. And so I could kind of see, you know what, price had already kind of dropped at this level right here. And so as a result, that was probably the end of the line there. And so as a result, that's where I kind of took profit. And I kind of used that as guidance. Okay, so that's one thing that we were looking at. Okay, here's Diamondback Energy, FANG. So here's the setup I just showed you a couple of minutes ago. Okay, price rallied up, popped that. So this is what we're waiting for. Okay, and when price came back, and I actually dropped it. Before we looked, I was looking at it in a 10-minute chart. When things actually started to happen, I dropped it down to a 5. It just kind of allowed me to watch it a little, watch it better, and be able to watch the arrival better. Because the arrival effectively affects my perception of how the setup might go. Okay, so I dropped it down to a 5-minute chart, but this is the same exact thing. This is the same level from the 10-minute you just saw. So price came back again, dropped down here, popped up, and right there again, pulled back a little, and again, right there, another nice little 2-to-1 trade there. Okay, and because of the fact that price, these levels, you can see there's some trading here. Price came up, it dropped out of there again. Price came back again. I was like, you know, I'm not going to get greedy. I'll take the 2-to-1 again. 30 to 45 minutes, pay some bills, nice little trade. Okay. Okay, and in fact, it actually then continued further. Unfortunately, I did not take that because I really thought that this might, you know, plus the fact we were also getting near the end of the day. This is around 4 p.m. here. Okay, but you can see, had you stayed in it, okay, this actually went to 3-to-1. Okay, and but given that this was 2 p.m., I was like, you know what, it's already 3 p.m. by the time I think 2:45 by the time this trade was going on. I was like, you know what, let me not get greedy here. So that was that. But again, you can see this actually went 3-to-1. Okay. Again, I was looking at this for context. I wanted to see what might get in the way of the trade. So here's the hourly chart that just kind of gave me some context there. Okay, here's MPC. MPC, as I recall, nothing happened with it. I never got a pullback. So this was a no entry. Okay. Here's PSX. I've kind of showed you this before. Again, here we have these two setups, one in the 5, one in the 15. And what ended up happening was price came back, drilled in, actually drove all the way to the bottom of the zone. And in fact, actually went a penny or so out. But because we always give our trades a little wiggle room, this thing came down, I believe, to kind of 66, 66.01 or something like that. Excuse me, 67.01, which is 2 or 3 cents below. But since our stop out point was 66.99, we kind of survived this little near-death experience as it dropped to the bottom of the zone. And then after that, kind of went up, pulled back a little, and then they basically eventually went again. And again, I took this off at, I think, 2 or 2.5 to 1. Okay, so that's what we were looking at. And then on that one, and then lastly, here's the XLE. Again, there's that level that I showed you 2 or 3 minutes ago. Price came up, rallied, consolidated for that one brief candle, came up, again, waiting for the pullback. Price came back, went in,